and go probably surge into the mid 60s or 70 zone, somewhere in there, before it even pauses. Now, I don't mean that's the top. I'm talking about this next gush could be a tremendous move, meaning a near double in silver from current levels. The key is to get up through today's high, which is like last I saw before we came on, was 34.65. You get up to about 34.95 and close the week there, and that momentum indicator I told you about says you're gone up. Price says you're exploding if you touch 36, triple top breakout. You see those, and I think you could almost double silver in a fairly short period of time, probably within 1 quarter.
In today's news recap, silver price marches past $34 on renewed trade tensions. Silver prices marched past the $34 an ounce mark on Monday as market sentiment soured over the weekend in the wake of renewed U.S.-China trade tensions. Spot silver traded as high as $34.31 per ounce during the session for a gain of more than 4%. COMEX silver futures also rose 4.5% to $34.51 an ounce. Driving the rally were heavy inflows into hard assets as the markets digested a potential re-escalation in Sino-American conflicts, which began last week when U.S. President Donald Trump claimed China had violated their trade truce. Beijing later denied Trump's accusations, stating it was Washington that provoked frictions between the world's two superpowers by reneging on their previous agreement. The dragged-out trade dispute boosted the appeal for safe havens, including silver, which has gained about 14% so far this year. Now we'll show you the best clips of the latest interview. Don't forget to like, subscribe, and turn on notifications so you do not miss out our daily recaps. And check goldsilverstacks.com to get your Stacker's Handbook, the ultimate guide to stack gold and silver, packed with strategies to trade the gold-silver ratio and get more ounces and build wealth over time so you don't have to rely on market commentators to make your investment decisions. Enjoy the episode.
Actually, if you go back and look at a silver chart going back to 1970s, let's say, and you see the peak in 1980 at 50 area, which was, very gaseous type peak, and you were up there so briefly, it was thin air and then it collapsed, okay? And then in 2011, early 2011, before gold made its high, silver got up in just short of 50, like $49 or something, and then dropped and held. This time, when we're up here in the 30s, for the last year, in fact, last May, silver got up to 32.70, okay, dropped, came back up in October, hit 35, they sold it, dropped, came back to 35 again in March this year, and dropped and had that flush where people sold silver thinking, oh, silver's going to go down because the stock market's going down, which is an erroneous assumption. And the people who sold that got killed, because silver popped back over 30 in a heartbeat from 27.5, and now we're pushing toward the 35 again. Getting back to 35 is what point and figure chartists would call, triple top. Now, I use the word top. It really isn't that case. It's a pending quadruple top breakout, or a triple top breakout, excuse me. If you go up to 35 again, I'm going to bet the next tick is 36 and you're gone. That's what the price chartist at that point will start realizing, hey, this action of the last year in silver, which has been violent, but still with a slight upward bias. Go back to last May, it was 32, and we're in 34.5, etc. They're going to realize, hey, we made a mistake. This isn't topping. It's been building a launch pad. Now, I don't trust price necessarily, so price says that. The only reason I would agree with myself about that 35 being a pending triple top breakout or a launch pad is that momentum says it is. There's a momentum structure when you plot a momentum oscillator of silver, where you measure silver versus like a 3/4 moving average or a 40-week average. You'll have a corrective process since last year, since last May. So 12 months of momentum cooling off while price held steady. And there's a structure on it when you look at the momentum chart that says, ooh, if I cross that line, I'm going to blow through. We're challenging that line right now. About another 50 cents above where you are now, you're gone. I think the first leg in silver is highly likely to take out the old dual highs at 50, which again are really phantom historic situations. They don't mean much. They were decades ago. And go probably surge into the mid 60s or 70 zone, somewhere in there, before it even pauses. Now, I don't mean that's the top. I'm talking about this next gush could be a tremendous move, meaning a near double in silver from current levels. The key is to get up through today's high, which is like last I saw before we came on, was 34.65. You get up to about 34.95 and close the week there, and that momentum indicator I told you about says you're gone up. Price says you're exploding if you touch 36, triple top breakout. You see those, and I think you could almost double silver in a fairly short period of time, probably within 1 quarter. And again, that's not the top, that's not the end of the move, that's just getting up out of this historic silliness. Gold, after all, is well above those levels, right? Made a high at 850 in 1980, made a high at 1920, 2011, and it's 3,500 area. So silver hasn't done that. Now, silver to sort of match that would be up, $60, $70 level. Anyway, that's what I think is about to happen.
In today's news recap, gold surges with rising global tensions boosting haven demand. Gold surged on revived demand for safer assets as the U.S. and China traded accusations, while a dramatic series of attacks clouded the prospects of peace between Russia and Ukraine. Bullion climbed as much as 2.7% after Russia and Ukraine wrapped up a second round of talks in Istanbul that failed to bring the two sides closer to ending the war. The precious metal earlier was boosted after Ukraine staged drone strikes across Russia on Sunday, while Moscow launched one of its longest attacks against Kiev. Meanwhile, renewed trade tensions between the U.S. and China and a weak U.S. manufacturing report further boosted demand for bullion. That haven appeal has seen gold climb more than 28% this year after hitting a record high above $3,500 an ounce in April. Haven demand also lifted silver, with prices surging the most since October. Looking ahead, there are a slew of U.S. labor market indicators due this week, and including the May employment report, which will help to steer the Federal Reserve's monetary policy. Spot gold rose 2.5% to $3,372.28 an ounce as of 11:27 a.m. in New York. The Bloomberg Dollar Spot Index fell 0.6%. Silver, platinum, and palladium all gained. Now we'll show you the best clips of the latest interview, but first, smash the subscribe button, turn on notifications, and check our new Numismatics handbook. Most stackers want to get active, but swapping their metals for dollars isn't an option. There's plenty of opportunities in the overlooked numismatics world. Mastering U.S. coins, key dates, and errors pays off by multiplying your ounces and capitalizing where others aren't paying attention.
A focal point that is, yeah, it's real and it's impactful, but it's not the prime driver of the markets. I think the prime driver of the markets is far bigger than that. I think it's monetary degradation. It's a government debt crisis that we're facing. Jamie Dimon spoke about that, the other day. Other people have said so as well. I think even Warren Buffett said, they would watch out for the U.S. government bond market. And that market we analyze closely, and obviously, it's bigger than the stock market. Okay, U.S. Treasury long end of the debt market. So it's very anemic. There's something wrong with it. In other words, back in 2020, when the T-bond futures were up at 170 and yields were real low, we got bearish in October of 2020. Well, it collapsed finally into 2022. Took a while to get going, but it finally did puke and got down to 117 from 170, 180 level. But since then, we're talking late 2022, you could just draw a line sideways. And it's tried to base, it made lower lows than that low since 2022, but only, it got down under 110, for example. Right now we're trading 112 on the nearby future. So it's very anemic, though. If this is a base, which we thought it might be several months ago, we had some technical reasons to assume you could get a strong counter-trend rally out of T-bonds, meaning a drop in yields on the long end of the debt market, which is the one the Fed doesn't control. And we sure enough, we got a rally. If you'll notice, back in April, we shot all the way up to 122 on the T-bonds from levels that had been hovering around, 10 points below there. But in 2.5 days, it crashed from 122 back down into the 111s. Whoa, what happened? So instead of being an alternative to the stock market, it joined it. Now, in the week since, and the stock market has rebounded, bonds have stabilized, but they've not really gotten off the mat. They haven't gone down anymore. But right now, they're going back down again. And when we look at the long-term charts, we know it's a negative trend. And we've given up on the notion of a, quote, counter-trend rally, where you get, let's say, a quarter or so of nice rally in the T-bond market as an alternative to stocks. Well, if T-bonds aren't an alternative, if they're not functioning that way, the 60-40 rule, which has now been broken fully, then that leaves only one alternative: gold. Historically, gold and T-bonds have tended to rally, advance during stock market bear trends. And the only one advancing now is gold. Well, why? Okay, forget the tariff issue. The government debt issues ballooned and ballooned decade after decade. It doesn't matter, Republican, Democrat, it just piles up. And the debt ratio, and so forth. We all know this. But nothing's ever really happened in terms of generating a debt crisis. And I don't mean mortgages this time, I'm talking U.S. government debt. What if we're at that point now, where finally, after decades of ignoring and building on this error, the market says, okay, I'm going to pay dues. In which case, you've got a T-bond crisis. Now, what does that mean? Well, if the U.S. government debt, or any other major central government's debt in the Western world, including Japan, let's say, and Europe, suddenly becomes a crisis, it takes a heck of a lot of money printing to try to stave that off, to try to keep that wave from crushing things. Okay, and Powell likes to sit here and diddle his thumbs and act like, well, nothing's wrong because all the data points look good, which is, you get the point. They've got a problem. And the question is, what are they going to do about it? And what they do about it is to do what they normally do, which is to put the pedal to the floor, do QEs, buy government debt themselves, play games, et cetera, et cetera. But ultimately, it's an increase in the money supply, artificially low interest rates, all the things that are drivers for gold, and the degradation in the money unit that we measure things by, the dollar. And I don't mean degradation of the dollar versus the euro, dollar versus, I'm talking about the real buying power of the money unit, which, if you double its money supply every decade, which is about what we've done for the last 70 years, ultimately it means its buying power gets cut in half every decade. And meaning you could have a world where you're in Venezuela, where it really doesn't matter if everything's going up. So the stock people could say, oh, look, our stock market's booming, like in Venezuela where they print the money. It doesn't matter. It's the issue is what rate does it go up compared to the degradation in the money unit. So even then, at that point, when you reach that crisis level, it's conceivable. We don't think it's going to happen. We think stocks are headed down. But when they start printing money, the question is, will it become like a Venezuela situation? Whereas we have a crisis beyond crises, which means political turmoil, upheaval, not just here, but we're talking the rest of the world, which has similar problems. So that's what's driving gold, I think, and silver. And right now, I think that my own personal emphasis is on silver. As I said to you before, we watch the mama market, gold's the mama. But as long as old gold mama is going up, you can bet silver's going to go up in irregular fashion, more than gold, less than gold, more than gold, etc. I think we're at the phase now where it's about to go a lot more than gold on the upside.
What do you think of Michael's take Do you agree with him? Will gold and silver blow up and shock the world, especially taking into account that now gold and silver will be legal tender in Florida? Will this be the ultimate catalyst? Gold and silver stackers need to see their stack be worth a gazillion worthless dollars. Post in the comments section down below your honest opinion and share this video with a stacker. Now check this video right here because you'll love it. I'll see you on the other side.